Good morning and good afternoon wherever you are. Ladies and gentlemen, I'm Brian Bullock, Executive Director of the British Chamber of Commerce, Vietnam, and I welcome you to the Renewable Energy Investment Opportunities in Vietnam webinar. As we all know, renewable energy is one of the strongest rising sectors around the world. Thanks to its geographical advantages, Vietnam holds great potential and is currently a thriving market for this sector. However, exploring this market could be tricky. So this webinar aims to provide you with practical insights that will actually help you with your investment decisions. Just one note, if you have questions, please type them at the bottom of your screen in the Q&A, and we'll choose some answers at the end of the session. Thank you. Now, without further ado, let's start this session with a presentation on Vietnam's economy delivered by Mr. Ken Atkinson. Being a founding member of BritCham Vietnam, as well as founder and senior board advisor of Grant Thornton Vietnam, Ken has 30 years working almost exclusively in Vietnam. He is surely in a good position to provide you valuable knowledge about Vietnam's economy. Over to you, Ken. We'll talk to you after you're done.
Thank you. Hello, everybody. Welcome to the webinar. I must confess to not being a renewables expert, but I do consider I know quite a bit about Vietnam in particular. As Brian mentioned, I founded Grant Thornton Vietnam back in 1993. It actually took me 3 years to get my investment license, which wasn't unusual at that time. Glad to say that licensing is generally a lot speedier, but still has its complexities for projects such as renewables, which Denzel will talk about. In terms of Grant Thornton, we are a global organisation, but our firms are independently owned and managed in the 140 countries that we're active in. And globally, we have over 55,000 staff and revenues of around $7 billion US. In Vietnam, as I say, we started in 1993. We were the second international accounting firm to get a license. And we have 2 offices, Hanoi and Ho Chi Minh City. We provide a full range of services through our 260 professional staff. I always like to start with the opening door of Vietnam, the open door policy, Doi Moi, which started in 1986, although the first foreign investment law was not promulgated until late 88, and my arrival in late 89. At that time, Vietnam was an incredibly poor country and was officially listed as one of the poorest in the world. And arriving in Hanoi, prior to landing, you could still see all the bomb craters from the horrendous bombing of Hanoi that took place. And also on the way in, I always remember the burnt out tanks and the gun turrets that you'd see along the little windy road in from the airport. For those of you who know Vietnam today, it is very, very different, and testimony to the development and to the success of Vietnam's Doi Moi policy. Total foreign trade in 1990 was approximately $5 billion US. Average per capita income was less than 200, and the country had minimal foreign exchange reserves. We used to joke it was the amount of dollars that foreigners had changed at the state bank the day before. The government was very reluctant to allow 100% foreign ownership, and the only way to invest into the country was really through joint ventures with state-owned enterprises. Of course, today, things are a lot different, and 100% foreign-owned companies are allowed. Looking at 2019, if we fast forward, GDP growth rate was over 7% for the second year in a row. But if we go back over 10, 15 years, the average GDP growth rate was consistently between 7 and 8%, but it has slowed over the last years. The CPI was well under control at 2.7%, and unemployment, which is an unusual statistic for a communist country, which Vietnam still is, was around 2%, slight increase over 2018. Foreign exchange reserves reached a record 79 billion, although still a little bit below the conservative levels that the World Bank give guidance on. And interest rates still relatively high by international standards, but policy interest rates were decreased slightly in 2019. FDI, foreign direct investment, did reach 38.2 billion, which was a very good year. It wasn't a record year, but it was a very good year. And that reflected a 7.2% increase over the same period in 2018. Of course, 2020 is a different story, although the year did get off to a tremendous start. But late January and February, we were hit by the global pandemic. Growth rate for the first half of the year was about 1.8% year-on-year growth, and estimates for the full year are ranging at the moment from 1.8 to 3%. There was an increase in the CPI of 4.19% in the first half of the year, and unemployment rose to 2.47%. Reflecting the impact of COVID on the workforce and the economy. However, foreign trade remained quite robust, and although the total decreased by 2%, exports were on a par with the previous year, and in fact in July and August we've seen increases. So I think we look like we're heading for something like a 7% growth in exports for the year. And the trade surplus is actually increasing, I think partly reflecting the slowdown in implementation of FDI projects. So capital equipment imports are slackening or slowing at the moment. The total value of FDI in the first 6 months was down, but not as high, not as much as one might have expected. And it's probably around for the up to year to date is around 10% down on last year. If we look at the annual GDP growth rates, as I say, the last 2 years were higher than the previous 10 years, and slightly over 7%. Vietnam per capita GDP has been constantly increasing from the $200 that I mentioned back in 1990. Currently, last year was $2,715 US per capita, and people are living reasonably well, and the official poverty rate in Vietnam is now well below 10%, and Vietnam is held out really as a shining star example by the World Bank. If we turn to exports, traditionally, of course, Vietnam was well known for its footwear and textile and garments, and they're still very important to the economy and to foreign trade, but they've been quite significantly overtaken by computers, electrical products, and mobile phones. Samsung, in fact, accounts for about $25 billion of our annual exports with its mobile phone production, most of it in the north of Vietnam. agricultural products remain important, in particular coffee, rice, and pepper, but other smaller value or smaller volume agricultural products, seafood, for example. Imported products, well, you see a lot of the same items on the imports as you see on the exports, and that's because a lot of the industry here is still processing. It's not a lot of value add, so people are importing using the cheap labor and then exporting. So it's not surprising to see those same items on both sides of the, if you like, the balance sheet. If we look at the larger investors, last year was South Korea, followed by Hong Kong. I guess the surprise was the way China is now directly investing into Vietnam, and ranking number 5 on the list. But historically, it has been Asian investors, and particularly Singapore, South Korea, Japan being the more prominent of those investors. In terms of sectors, manufacturing, of course, is very important, and that accounts for a big chunk of the investment, followed by real estate investment. But I've selected a slide which shows the favorite sectors from private equity, and they, of course, are quite different. But fintech is riding the boom of startups in Vietnam, and venture capital coming in to support those startups. Education, which is also on the strategic investors coming into Vietnam, as well as on the private equity, is very important, and Vietnamese spend a lot of money on education for their children. You'll also see green renewable energy ranks very highly, certainly from the private equity investors' perspective. And that's also important because of the difficulties in basically commercial finance, which Denzel will also talk about. Some companies, rightly so, regard Vietnam as a high risk jurisdiction, particularly in the areas of compliance and governance. And the 3 higher risks that surface in our private equity survey, the Grant Thornton Private Equity Survey, are corruption, regulatory compliance, and employee fraud and crime. I think a lot of this goes down to setting up correctly, and having the right controls in place. And I think if you can do that, then you can find Vietnam to be a very rewarding investment destination. And there are enough lessons to be learnt, and enough people that can give you useful advice that if you are coming into Vietnam, you can do a lot to mitigate these risks. Foreign trade agreements are very important to Vietnam as the economy grows, as we try to improve the per capita GDP in the country. And the more recent ones of being the EU-Vietnam Free Trade Agreement being the most recent, the ASEAN Economic Community Free Trade Agreement, the AEC, and also the CPTPP, which was the Trans-Pacific Partnership, less America. All those are particularly important to Vietnam. So I'll finish there. Hopefully there will be some time for questions and answers at the end, and I'm very happy to answer written questions or verbal questions. Thank you.
Thank you, Ken. That was very informative. Coming up next is a speaker with expertise in the renewable energy sector. Denzel is a co-founder and managing director of Pioneer International Consulting, managing the Hanoi and Singapore offices. His team advises on investment into the development of clean energy in Vietnam, especially in project planning and development. Your turn, Denzel.
Thanks, Brian, and thanks, Ken. PIC is an advisory firm that advises on the development of and investment into clean energy in Vietnam. We work with both local and international investors across a spectrum of renewable energy and clean energy projects, from greenfield and brownfield projects, with respect to single assets and on a platform basis. Our core services include assisting with early stage structuring, working closely with developers during the pre-development phase of the project, particularly with respect to strategy, planning, and managing the permitting process. We undertake project analysis and evaluation, provide also transaction and advisory services with respect to the acquisition of projects, and manage government affairs and engagement with national and provincial authorities with respect to both market entry and the development of projects in Vietnam. The slides which I'll go through will also be available after this presentation, and if you would like a copy, please do contact a member of the BritCham team for that. This presentation will look at the policy framework, which has really led to a material increase in renewable energy capacity in Vietnam. We'll then look at the project development process, so the typical process as it applies to a renewable energy project in the country. Then touch on some of the core challenges as they relate to renewable energy projects, primarily grid capacity and the availability of project financing. But then within that context, we'll also look at the basis on which projects are being financed and developed, namely through EPC financing and the support of ECA-backed structures, and we'll look at two of those. We'll then go on to look at some of the issues impacting the PPA and the framework issues which are impacting the development of larger scale projects. And I'll conclude by some thoughts on where the future of development goes. In terms of renewable energy, it's a strategic priority for the Vietnamese government now. That follows from Resolution 55, a Politburo resolution, which was released earlier in the year, and comes within the context of a move away from, and a transition away from coal. A number of coal power projects are delayed, and the ability for coal power in the country to be financed and developed going forward looks challenging. So renewable energy is part of a diversified mix of power sources within Vietnam, and within that context has been supported by two key policy initiatives, the feed-in tariff and a tax incentive regime, which have assisted with the development of projects in Vietnam. The planning of power projects is managed by the Power Development Plan. This is a national power plan. And the current national power plan is Power Development Plan number 7. This ran from the period of 2011 through, and it runs through to the end of this year. This will be superseded by Power Development Plan number 8, running from 2021 through to 2030. We'll now look at the feed-in tariff and the capacities it relates to wind and then to solar. The feed-in tariff, which I mentioned, applied for wind projects actually from 2011. but it was at a level that wasn't really deemed to be viable for project development at that time. And within PDP7, there was a target of having 2 gigawatts of wind energy by 2025. However, between 2011 and 2019, only 3 projects were developed, totaling 153 megawatts. And as such, there was a revision of the feed-in tariff in 2019 upwards to 8.5 US cents for onshore projects and 9.8 US cents per kilowatt hour for offshore projects. This feed-in tariff led to a material increase in project development in Vietnam. And as of PDP7's current position, there are 12 gigawatts of projects under approval and that will be included into PDP7 revised, which is in the process of being finalised. So from 153 megawatts to 12 gigawatts, there's been a real material increase in development in the wind sector as a consequence of that revised feed-in tariff. We're now moving, if you like, to a new phase of wind development as a consequence of that. And looking forward as to future development will be the amount of wind capacity included into PDP 8. And Resolution 55 states that there should be a target of 15 to 20% renewable energy capacity in Vietnam by 2030. As such, and in line with total capacity at that time, which is estimated to be 130 gigawatts, that would be renewable energy capacity in total of 19 to 26 gigawatts. With respect to solar energy, the feed-in tariff came in later, in taking effect in 2017, and at a materially higher level. At that time, there was a target for 4 gigawatts of solar energy by 2025. However, due to the level of that feed-in tariff of 9.35 cents per kilowatt hour, there was 4.5 gigawatts of solar capacity developed by the end of July last year. That date being relevant because it's the time at which that original feed-in tariff came to an end. What you then saw after July 2019 was a period of deliberation with respect to how solar energy should be supported. And after some delay, a revised feed-in tariff was agreed for the remainder of this year at the levels that are detailed on the left-hand side of the slide. The real rationale behind that was that projects that hadn't reached the deadline of July 2019 may have started some form of development, and those that have received their investment approval before November were given the opportunity to complete completion through to the end of this year. Within that context, there's an additional 1.6 gigawatts of solar energy currently within planning. The extent to which all of that will be developed by the end of this year is yet to be seen. So feed-in tariff 2 under decision 13 follows through until the end of this year and relates to ground, floating and rooftop. After 2020, Vietnam will be moving to an auction regime for solar projects. The form of that auction regime is yet to be finalised, but latest proposals and people anticipate it will take the form of a project-based auction, whereby projects satisfying the technical requirements to participate in that auction will be assessed and ranked according to the competitive pricing bids that are submitted within a pilot auction program up to 1 gigawatt of capacity and lasting through to 2022. This will be the first competitive auction in Vietnam as it relates to energy and also renewable energy. And this pilot program from 2021 through to 2022 is set to be seen as the precedent for the basis on which wind would later move to a auction regime after the end of the feed-in tariff, which applies to wind, which is November next year. So against that context, and having seen the renewable energy that has been developed to date, I thought it was worth touching on the key parts of the project development process. The project development process as it relates to both wind and solar is quite similar and really takes 5 phases. There's a planning phase, then there's a phase on which you'll seek your investment approval, followed by a project documentation negotiation and the preparation for construction, financial close, and then the commencement of construction, and followed by operation of the project itself. Just looking at that planning phase, there will be 2 key aspects to this. One is an assessment of the site and the project. With respect to wind projects, that will require a wind survey, a minimum of 12 months. Then there'll be a pre-feasibility study, and following these, a submission for inclusion into the National Power Development Plan. The National Power Development Plan is managed by the Ministry of Industry and Trade, and for larger scale projects, Prime Ministerial approval will be required before NPDP approval is granted. Following NPDP approval, it's possible to move on to obtaining, if you like, the second part of your concession right, and that is the investment license. That takes the form of obtaining in principle investment approval, obtaining your investment registration certificate and your enterprise registration certificate, effectively the license to develop the project. Following having obtained your investment license, it's possible to move forward through to the preparation of the project site and the negotiation of the documents that will effectively enable the project to be developed. So there'll be a land clearance process, which may involve relocation and compensation. They'll be obtaining a land lease agreement and land use rights, and in parallel, the negotiation of the key project documents, the power purchase agreement with EVN, the grid connection agreement, and negotiation of the financing documents. Following this, there'll be approvals as they relate to the project site and the project, environmental approvals, fire and safety approvals. And then following that, and financial close, it will be possible to commence construction. For wind projects, you'll be probably looking at, on the left-hand side of that slide, a period of about 12 months, and then construction between 12 to 24 months. The development time for wind is significantly faster. Wind projects are, the development time for solar is significantly faster, with that development time being as low as 4 to 6 months. So within that context, what are the challenges and what are the solutions to the challenges for renewable energy development in Vietnam? There are 2 key challenges really. The first being the capacity of the grid, and the second, the availability of project financing. With respect to the grid requires upgrade. There's a $5 billion upgrade program planned and in progress. However, the significant amount of solar that was developed in recent years has led to pressure on the grid. The dispersed nature of the projects and the insufficiency of the current transmission lines has meant that onboarding new projects is problematic until that grid upgrade program has been completed. The second issue is really the availability of financing on a non-recourse project finance basis. The key challenges to this are that the local bank finance market doesn't really have the funds or the expertise to support the level of development within this space. The World Bank estimates that local banks have approximately funds to support up to 4 gigawatts of renewable energy. So within this context, local banks will need to work with regional and international banks. However, international banks don't see the PPA framework as it's available to solar and wind projects as bankable. They're not happy with the risk allocation between the state and the private sector within these agreements. They also, for the larger projects, look to have government support, which has been made available within the Build, Operate, Transfer framework, which is analogous to the PPP framework in other jurisdictions. However, the government support, as it was available to the BOT framework, is not available to renewable projects which receive the feed-in tariff. So you have this constraint with respect to local bank financing and a hesitation or reluctance from the local banks to participate in that framework. So the question that then leads to that is, well, why is there not a reform of that PPA, and why is more government support not granted to support renewable energy? There are perhaps three main issues to explain that. The first being that there has been 4.5 gigawatts of solar developed under what is deemed to be an unbankable or imperfect PPA. The government has fiscal constraint with a debt ceiling of 65% of GDP, which is unwilling to exceed. And within that context, hesitant to grant government support to a renewable energy sector which is already receiving a feed-in tariff which is deemed to be sufficient for project development. And then the third is EVN as a prudent off-taker. The PPA, as we'll go on to see, allows EVN to retain discretion and manage its risk with respect to renewable energy projects. And as such, it doesn't want to give way on issues which are seen to be an unfair or inappropriate allocation of risk under the PPA. But within that context, I think it's very important to emphasize that development does continue at pace. But that's really been very much within the solar space and for small-scale wind projects. And within that context, we're seeing two real key forms of financing structures facilitating solar and smaller-scale wind development. Those are ECA-backed financing structures where there's an involvement of an export credit agency within the structure, and some form of credit risk mitigant, which effectively looks to address those project risks or PPA risks. And that will either be a guarantee from a local bank or recourse to one of the project development sponsors who will provide some guarantee with respect to the project. So in that structure, you really have an ECA combined with an additional credit risk mitigant. There's also the EPC deferred payment financing structure. If we look at the solar space, Chinese EPC contractors have been very effective in gaining market share through providing financing terms whereby the construction cost and risk is borne by the EPC. The structure there we're seeing is about 80% of the total investment cost prior to COD being financed by the EPC contractor with a level of equity at around 20%. These two structures, however, are likely not going to work for the larger scale projects going forward, because the recourse to that credit risk mitigant or the availability of the financing capacity of the EPC is not going to be sufficient for the scale of financing needed in the larger scale projects. The following two slides just go into a little more detail as to the ECA structures which I mentioned. This is the bank on lending structure, where you see the role of the EPC supporting the project structure and the international bank lending to the Vietnamese bank. As such, the credit risk here is not with the project, but with the Vietnamese bank. The Vietnamese bank then on-lends to the project company, assuming that project risk. The second form of ECA structure, which I mentioned, seeks to mitigate the risk in a different way, again, with export credit agency support. But here, the international bank or the regional bank seeking recourse to either a local bank or one of the project sponsors in the form of a guarantee of project risk. As mentioned, though, that larger scale projects, and indeed where you can't use these structures, aren't going to be bankable because of issues that impacting the PPA. These are well talked about, but I think it's useful to look at these rather than the specific clauses as to the trends that and issues that they relate to. Really, the first is how together these issues create an uncertain level of revenue with respect to the project over the lifetime of the project, and uncertain compensation in the event that the project is terminated. So their termination risk, there is no pre-agreed termination formula. Therefore, if EVN chooses to terminate its offtake, then you have recourse to a compensation mechanism, but that's within the context of mediation in Vietnam and recourse to the Vietnamese courts. Equally, there's no deemed commissioning, and EVN retains rights to curtail from the project in the event of the occurrence of technical issues impacting its ability to receive energy from the project. Then there's the EVN discretion as to whether it actually chooses to buy from the project, and there are no take or pay provisions compounded by the curtailment issues just mentioned. Then there's the creditworthiness of EVN. Whilst it's now got a credit rating, it's still seen as effectively an issue for international developers to rely on EVN performance risk. This is a risk which actually under the BOT framework was mitigated in the form of a government guarantee undertaking for that risk, but as mentioned, it's not available for these projects. Then there's really a concern with respect to future competing demand. So you've seen a lot of development around the solar projects, and where there is future pressure on the grid, there's concern that effectively projects developed under the feed-in tariff may not rank as favorably as projects that are being priced at a lower price. And again, no take or pay provisions compounding the potential risk there. Then there's FX country risk. The foreign reserve availability within Vietnam has improved, but where you see large scale projects going forward seeking to remit US dollars from their project, there isn't an FX guarantee. In short, the government is unable or unwilling at this time to say that it will guarantee a project's ability to remit USD through guaranteeing the availability of USD. And then there are wider country risks with respect to the governing law and the force majeure risks under the PPA itself. So I think within that context, some concluding remarks. Renewable energy is a strategic priority in Vietnam. There has been a material increase both in solar capacity and approved wind capacity. And going forward, it can be certain that the level of renewable energy capacity in Vietnam will increase. Equally, whilst there are problems with the PPA, solutions are being found for those, be that through EPC financing or ECA-backed support. Going forward, there'll be further development under these financing structures as the auction regime for the solar space is launched, and equally as the feed-in tariff for wind remains available until November of next year. However, for larger scale projects, there is going to have to be bilateral engagement to addressing the issues touched on under the PPA, and potentially with respect to requesting some form of government guarantee as it relates to FX availability and EVN performance risk. Ultimately, going forward, true velocity in terms of the development of renewable energy in Vietnam will be achieved through effectively a bankable PPA framework, which in turn would deliver a lower cost of capital and ultimately a lower cost of electricity to users in Vietnam. As mentioned, if you'd like a copy of the slides, please do request these, and if you have questions, please feel free to get in touch. Thanks.
Thank you very much, Denzel. That was excellent. Now we'll move on to the second half of the webinar, where local developers will give a discussion about their projects. Shire Oak, being a leading developer and financier of large-scale renewable energy projects in developing countries and emerging economies, has an experienced team who have been involved in the biggest projects in the UK and around the world. With Vietnam as their central hub of operations, they also cover other offices in nearby countries of Southeast Asia. Please welcome Mr. Mike Edge.
Hello, everyone. Thanks, Brian, and thank you, Denzel and Ken, for that very informative and interesting introduction. So, as Brian introduced, I'm from Shire Oak International. We are a renewable energy platform based in Vietnam. We come from a background of large-scale ground-mounted solar in the UK, where we have delivered over 300 megawatts since 2010, and also been involved with onshore wind development and tidal power development in the UK and Europe. I'm going to talk to you briefly today about our current focus of our international team's efforts, and that is in the rooftop solar market in Vietnam. Now, I don't need to repeat the excellent statistics that Ken set out at the start of the call, but clearly there are several key drivers, several macro drivers for the push towards decarbonisation, reducing energy costs, improving the competitive edge of the manufacturing industry here in Vietnam, and that's ultimately what our rooftop business is about. I think it's worth saying just at the top, and to talk to Denzel's point there around the current issues with some of the legislation and contractual frameworks for large-scale projects. As I said, we come from a background of development and construction of large-scale projects, and we absolutely have ambitions to capitalise on that experience in Vietnam, but we also are very much aware and agree with some of the constraints at the moment. And it's interesting, the point that you know, in 2019, 4.5 gigawatts of solar was developed. If you actually look at who developed that, you'll see that virtually none of it was developed by Western investors. One or two very small projects, and I think that really highlights some of the issues with that side of the business. I'm going to quickly try to give you a slightly different view of things in the smaller scale sector. So rooftop solar, straight into it. This is what we do. We are a developer, financier, constructor and operator of rooftop solar systems. We've been building assets in Vietnam since 2019. This gives you a quick snapshot of some of our recently completed projects. Where we were talking about gigawatts of wind and solar previously, these projects are typically much smaller, under 1 megawatt in capacity, and typically serving the on-site electricity requirements of the tenants of the roofs that we are occupying. Why does this make sense versus developing a 100 megawatt solar project in one go? Well, for a number of reasons highlighted already on the webinar. Permitting is much less onerous for smaller rooftop mounted systems. The risk of grid curtailment, whilst still present, is reduced. It's reduced because these installations are being put into industrial zones in most cases. EVN typically struggles to get enough power into a lot of these industrial zones. There is a deficit of supply versus the demand in those industrial zones, particularly in the south of the country. So this electricity that is being generated is being used directly on site, or if not, very close by. So there is limited exposure to curtailment risk. notwithstanding that it does still persist in some cases, and obviously over 20 years, we're not sure exactly how the system will play out. It's politically acceptable. It provides clear benefits to the clients, to the owners of these factories, where they are using the power on site. We are able to sell that power to them at a significant discount to the alternative of purchasing that power from EVN. In our view, that is something that the government is and should look to encourage through improving the competitive advantage of its export, of Vietnam's export market, and also, Ken talked about GDP growth recently of $2,715, 2019. It's increasing domestic market for consumables that are being made in these factories. Improving the competitive advantage of that market sector is important to the government, and if it can do that whilst decarbonising the overall energy mix, we see that as a win-win situation. So again, just to give you a brief overview of our operation here, we have ambitions to create a Southeast Asian renewable energy platform in Vietnam, based in Vietnam. We already have operations in Indonesia and Myanmar, and we're looking to expand from here. Again, quickly, why is investment in this space attractive to investors? And I think, again, Ken mentioned that there are risks associated with investing in Vietnam. One of the biggest ones is getting the corporate structures correct at an early stage. That can be challenging, and it's something that we've been very aware of from the start. But I think, as Ken also mentioned, if you do invest in Vietnam in the correct way, there are significant upsides, and this is an early market for renewable energy. The premiums are good, the returns are higher than we see in most solar markets. I've come from recently developing large-scale projects in the UK, financing them at 4% on total return, and we're looking at double-digit opportunities here for returns on these projects. EVN-backed US dollar-linked revenue for 20 years under the feed-in tariff. Strong levels of escalation in revenue where we are able to sell power to clients at a discount to the retail electricity price, which over the last 10 years has seen an average annual increase in the relevant prices, the prices relevant to rooftop solar, of 5.6% per year. So there's a high level of escalation in those revenues. We know that because of the increase in GDP and the growth in the economy, 7% for the last 2 years, we are going to see the demand for electricity increase and the price alongside it. As I showed you some of the pictures there, we developed our own small portfolio of 6.5 megawatts in 2019. We're now in the process of building the first 150 megawatts of our pipeline to be completed in 2020. And those projects are being funded by a combination of our equity shareholders. We are also utilising some local debt. As Denzel mentioned, local debt does have some limited capacity, but again, the rooftop sector is an area that a lot of local banks are very comfortable with and understand very well, and can provide really useful liquidity because they are able to understand the market, the credit risk, much better than most international banks, and they are becoming increasingly comfortable with investing in Vietnam. Again, no need for me to tell you what you already know, but there is a huge opportunity in here in this country in terms of rooftop. 98 hectares of industrial parks. That equates in total to some, assuming that the majority of that were usable, over 150 gigawatts of potential rooftop solar. And I'm not suggesting that would be a feasible or useful thing to develop, but to put that into context, it's over twice the installed capacity in the UK. There is the available capacity for rooftop solar for twice the installed capacity in the UK, including all of our nuclear CCGT and coal-fired power stations. There's a requirement for 6 gigawatts of new capacity per year, and that coupled with a very good solar resource means that we see this as a very interesting investment opportunity. Just really quickly, what does our business model look like? We tend to have two main types of projects that we fund. Purely a roof lease agreement, whereby we will rent the roof space from a client who is either not creditworthy or doesn't use very much electricity, and therefore the benefits of selling to that client are quite low. In that case, we would sell the electricity back to EVN under the feed-in tariff that Denzel pointed out, the 8.38 cents. Notwithstanding the issues that are present in that PPA around termination, around change of law, we accept that those risks are there. In our view, the macro drivers for rooftop solar, as I mentioned, increasing competitive advantage of the export market and decarbonising the network, alongside the fact that those risks are in our opinion, and in our investors' opinion, reflected in the level of returns that are available. The other model is, as I said, power purchase agreements with corporates. Credit risk is sitting with corporates, a diverse basket of corporates. So your review and client appraisal process becomes key. And we have put in place a very solid governance process in order to make sure that we are only contracting with creditworthy counterparties that are going to be there for the duration. Very quickly, snapshot of our operation here and our pipeline. So we are seeking to capture the market early and be the leading rooftop developer in the country. We have a team of over 65 people based in Vietnam across sales, technical, finance, legal, and commercial, and we are leveraging that team and deploying it to realize the potential that we have gathered over the last year, and that potential is over 2.1 gigawatts of rooftop capacity across more than 700 projects in 45 provinces. So we see the opportunity as being a very large one, a very significant one, and Shire Oak has positioned itself at the forefront, capitalized on the work it's done in the last year, and set up a team that is needed to deliver on this potential. And we'd be very interested to understand if there are any questions from the delegates here today, any interest in understanding more about investment opportunities, specifically in Shire Oak and specifically in rooftop solar. And also, of course, got to get a sales pitch in there at the end, but we're always looking to add to our pipeline, and are very interested in hearing about any suitable locations that you might have in mind. And with that, I'll leave it there. Apologies, Brian, if I've gone over time. Thank you very much.
Thank you very much, Mike. There were lots of opportunities. It's amazing. Next up, we have SkyX Solar, founded by the management team at Vina Capital. SkyX is a solar rooftop power developer for commercial and industrial segment with over 100 years of experience, collectively in energy development and business building. Please welcome Mr. Samresh Kumar.
Yeah, hi. Thank you very much. Let me just share my screen. Yeah, in case my screen is not visible, just do let me know. Good afternoon, everybody. I'm very, very happy to be here and sharing about us with all of you. Since the time allocated is short, I will keep it brief. Let me talk about the rooftop solar segment very briefly, because some of it is already covered previously. Vietnam is the fastest growing economy in Southeast Asia and amongst the fastest in the world. There is currently around 8% power demand supply gap in the country, and the gap is expected to increase in the next few years. So it requires a significant amount of investment in the power sector. Renewables have already become Vietnam's lowest cost option to meet the increased demand of energy. And within the renewable space, right, when we look at solar and wind, solar rooftop, especially for the commercial and industrial sector, is particularly interesting and for multiple reasons. Number one, there is no land requirement. So there is no land clearance, etc. issues to be handled, which is a big issue in a country like Vietnam. There is no transmission issue in this case because power is consumed where it is generated. The credit of the customers is very strong because we as a developer, partner with largely roof owners which have very strong credits. The contracts which we sign are bankable because we develop these contracts with both our in-house and external law firms, and these are bankable. And there's a lot of regulatory support in the right direction, whether it's through incentives, tariffs, or tax structures. Then the market of, one sec. I just want to move this from, okay. Then the market opportunity is very huge, and it is in an early stage of development. When we look at the size of the market, based on our internal estimates, around more than 40 gigawatts of rooftop solar can potentially be developed by 2030. Obviously, not all of it will develop for multiple reasons. It could be the quality of the roof, or it could be quality of the tenants. But the potential is huge, and there's more and more factories getting shifted, from our bigger neighbor to Vietnam, and the size would increase. A little about SkyX Solar. So our vision is to be the world-class dominating market leader for rooftop solar for the commercial and industrial segment in Vietnam. So we are very focused, country focus is Vietnam, and the segment focus is CNI rooftop. We provide an end-to-end solution to our clients, wherein we invest, design, build, and operate the system during the contract term. And after the contract term, we typically transfer the system for free to our customers. And we provide financial benefits, which are generally 5 to 15% lower tariff to what they pay to EVN, and a lot of environmental benefits. For example, for each megawatt of rooftop solar power plant which gets developed by us during the term of 25 years, it is equivalent to more than 400,000 of tree seedlings planted. So that's a huge positive environmental impact which renewables make, and our clients can market this when they install rooftop solar with us or with anybody else as well. We have strong relationships across the ecosystem in Vietnam. So if you look on the right side, we have a good network of potential clients in the industrial and commercial space. We have looked at multiple EPC companies, and then we have shortlisted around 4 or 5 with which we work with, and we've shortlisted across technical, financial, and obviously pricing. We have huge experience as a company and as a team to raise international capital, which would be essential to as we continue growing. And last but not the least, we have good relationship with the regulators like EVN and MOIT, which is essential as one scales up in a country like Vietnam. SkyX Solar is owned by Vina Capital. Vina Capital is one of the most experienced asset management and investment company in Vietnam. Cumulatively, we manage around $3.3 billion across multiple funds, which is a private equity fund, a capital markets fund. We have a technology fund. We do a lot of real estate investments. We are an international investor and investing in Vietnam for almost 20 years now. But we are quasi-local because we've been operating only here as well. We don't invest outside. We have put together a very, very strong team to build this out. My name is Samresh Kumar. I'm the Executive Chairman and CEO of SkyX Solar. I have around 20 plus years of experience in investing and building businesses in Vietnam, India, Russia, US, and the UK. Don Lam and Brooke Taylor are the CEO and COO, respectively, of Vina Capital Group. Dr. Kwok is one of the most senior power professionals in the country and is an advisor to SkyX Solar. He's building out LNG to gas power plants for us. And we, within SkyX Solar, have accumulated a very, very strong team with complementary skill sets and experience, from sales, business development, technical, legal, and finance. When we look at ourselves against competitors, how do we feel confident? The reason being is that we bring and combine the strengths of both a purely international player in Vietnam in terms of best-in-class engineering components, strong project execution capabilities, and a commitment to EHS practices, combining with the strengths of a purely local player, which is having all the boots on the ground and being agile and quick to deploy, and more importantly, having the expertise to maneuver the local landscape. When we are developing these projects, right, three things are very, very important for me. Number one, we only cooperate with creditable and reputable clients so as to mitigate the credit risk, right? So we look at the sector in which our potential client operates in and whether that sector has a long-term potential. We look at the geography in which these are located, because the central and south of Vietnam have high irradiation, and that is our focus for now as well. Of course, we could do it in north, but the irradiation is less, so we've got to amend the commercials accordingly. We look at the financials of the company to assess the credit risk, and we as an Vina Capital as a investor with a large history of operating in Vietnam and investing in Vietnam, we can assess the credit quickly as well. Technical, we perform stringent technical feasibility and build systems which conform to world-class standards. And commercials, so we offer commercials such that we get our minimum project and equity IRRs. The second thing which is very important is to build systems which are world-class, right? So whether it is on the design side or on the components and guidelines. On the EPCs, as I said, we've looked at more than 15 EPC companies and shortlisted 4 or 5. We evaluated them based on multiple criteria: technical, financial, execution track record in Vietnam, and of course pricing. And then we use only tier 1 components, right? Whether it's the panels, inverters, but it's not just the panels and inverters, the mounting structures, the cables are super important, right? So we take extra care on those aspects, and we have a strict adherence to world-class EHS guidelines. The third thing which is very important is to have robust commercial structures and contracts. We have contracts, whether it's on the client side, PPAs or EPC contracts, vetted by our internal lawyers and our external law firms which we've used, and these are very, very credible law firms. So the contracts are very bankable. We are flexible in the commercial structures we offer to our clients, such that we maintain a minimum project IRRs of 10 to 14% in dollar terms over the project term, and an equity IRR of between 14 to 18% on dollar basis. We plan to build more than 200 megawatts of rooftop solar in the next 3 years or so. And this year, we are on track to commission around 35 megawatts. And that's the plan. In 3 years, hopefully, fingers crossed, we should do more than 200. As I speak, we are currently building more than 20 megawatts of rooftop solar in central and south of Vietnam. There are a host of different clients. One is a steel company, Taiwanese steel company. One is a hotel company, which we partly own. Then there are, Japanese SMEs, which is, a joint venture with a local company. And there are a couple of Korean companies which we have partnered with as well. So that's it from my side. I'll be happy to, take in questions, or, if people would like to reach out to me separately, please feel free to do that. Thank you.
Thank you very much, Samresh. That was very informative. And thank you to all of our speakers this afternoon here in Vietnam. And thank you to all the attendees today. We've run out of time. So I think if most of the questions are being answered offline as I speak or in the chat. If you have any other questions, please don't hesitate to send an inquiry to Toby at Tuan, tuan.thieu@britchamvn.com. And keep in mind, we have another excellent webinar coming to you in a few weeks on September 24th. We have a quick look into Vietnam and its supply chain. I hope you all will keep an eye out for that. Again, if you can follow us on Facebook, LinkedIn, and Twitter, the British Chamber of Commerce, we'll keep you up to date with our activities. Thank you again, and enjoy the rest of your day.
Thank you.